You have purchase orders lined up. You have the operational capacity. But when you walk into a bank to get capital to execute, the conversation stops the second you admit you lack physical property to pledge. The Ministry of MSME built the Credit Guarantee Fund Trust for Micro and Small Enterprises, or CGTMSE, specifically to bypass that exact roadblock. This chart shows the actual, tested footprint of the program. We are looking at 14.69 lakh crore rupees in disbursed capital, actively functioning across 1.47 crore approved business cases to date. That capital is flowing directly to the factory floor, covering heavy manufacturing and electronics assembly lines, and it's equally active in keeping cottage industries and individual textile workshops running at scale. If you want to understand how to leverage these exact financial tools for your own operations, hit the like button, subscribe, and let me know in the comments what specific funding hurdles you're dealing with. CGTMSE functions as the primary financial artery for Indian businesses that need to expand but don't hold the deeds to commercial real estate. But here is the disconnect. The government aggressively advertises these collateral-free loans, yet thousands of business owners walk into their local branch and get rejected anyway. The confusion comes from assuming the scheme forces the bank to approve your application. It absolutely does not. This flowchart illustrates the true power dynamic. The CGTMSE guarantee is built to protect the bank's balance sheet, not your business. The government only covers a specific percentage of the loan. That leaves the bank holding 10 to 25% of the total risk. Because the bank is still on the hook for that remainder, they will evaluate your cash flow and financial health with the exact same scrutiny as a standard commercial loan. And if your business goes under, it doesn't wipe your slate clean. You remain legally liable for debt. Your CIBIL score takes the hit, and the bank initiates recovery proceedings. Recognizing that the bank is still acting purely out of self-preservation is the only way to successfully package your application. The scheme removes the demand for physical property, but it replaces it with a strict demand for undeniable business viability. To even sit at the negotiating table, your entity must be officially classified as a micro or small enterprise and hold a valid UDIM registration. Historically, retail and wholesale traders were locked out, but recent revisions have brought market vendors and large-scale traders fully into the eligibility pool. The scheme is also optimized for women operating independent ventures or managing their own warehousing and logistics. Downstream agro-based processing and food packaging units are entirely eligible as well. There are, however, hard legal boundaries. Primary farming activities and self-help groups cannot use this specific guarantee. And if your turnover or investment capital pushes you up into the medium enterprise bracket under the MSME definition, you are completely disqualified. The sector coverage reaches almost every corner of the economy, but strict adherence to the micro and small classification is your non-negotiable entry ticket. This gauge represents the newly revised borrowing ceiling. Standard micro and small enterprises can now seek guarantee coverage for loans up to 10 crore rupees. If you operate a DPIIT-recognized startup, that maximum ceiling officially doubles to 20 crore. What matters just as much as the loan amount is the guarantee coverage, the precise fraction of a defaulted loan that the trust will pay back to the bank. For a general category borrower taking a standard loan up to that 10 crore limit, the baseline coverage sits at 75%. But the rules shift based on who is borrowing. Micro enterprises taking smaller loans under 5 lakh get 85% of their debt backed by the state. Women entrepreneurs receive the highest level of backing in the entire system, securing a 90% guarantee coverage. SC and ST business owners, along with enterprises operating in the Northeast region, also see their coverage elevated to 85%. Put yourself in the loan officer's chair. When the government promises to absorb up to 90% of a potential loss, the bank's financial exposure drops significantly, making approval much easier. Your demographic profile mathematically dictates the bank's risk level. If you fall into these priority categories, you are an extremely attractive asset to a lender. Bypassing the need for physical collateral comes with a direct financial trade-off. It requires an annual guarantee fee. This pricing table outlines the April 2025 revised fee structure. You pay 0.37% for loans under 10 lakh, scaling up to 0.85% once you cross the 1 crore mark, and capping at 1.2% for the absolute highest limits. Keep in mind, this is not a one-time processing charge. This fee is assessed every single year based on your outstanding loan balance. When you weigh that fractional percentage point against the massive risk of encumbering your personal home or factory deed, it becomes a highly strategic operating expense. The most fatal procedural mistake borrowers make is trying to apply for this money directly through a government portal. You must route your application exclusively through registered member lending institutions, meaning the major commercial banks, small finance banks, and authorized NBFCs. Before you even request a meeting with a bank manager, you need an airtight document stack. That means your UDYAM registration, your GST returns, and 2 to 3 years of income tax returns filed and ready. You also need a meticulously crafted, detailed project report and a clean balance sheet that mathematically proves your future cash flows. Bank managers process CGTMSE applications using the exact same underwriting standards as any standard unsecured loan. Flawless paperwork is the only trigger that activates this guarantee. If your business is genuinely profitable and facing high market demand, but you are artificially stalled because you don't own real estate to pledge, this scheme provides the funding necessary to scale your operations. Call your chartered accountant today. Get your financial statements completely aligned before you walk into the branch to ask for capital. If this breakdown helped clarify your financing options, hit the like button, subscribe to the channel, and share this video with another business owner who needs to scale.